unit trusts is a good option or not.
Let's use Amana Saham Bumiputra as an example. In 2022, due to the volatility of the capital market, the ASB dividend payout ratio was at 4.6%, which is lower than the 8% dividend payout from 10 years ago. So you might be wondering, how can I get better returns then? Well, one good option would be ETFs. In this video, we'll look at what ETFs are and how you can invest in them with M+ Global. So what is an ETF? An ETF is a basket of securities that includes a variety of stocks, bonds, or other assets, and it is traded on the stock exchange as a single security. Take the S&P 500 index for example. It is recognized as an essential benchmark for measuring the performance of the US stock market. And the S&P 500 ETF, aka SPY, is an ETF that replicates the performance of that index. In other words, if you were to invest $100 in the S&P 500 ETF, that $100 will be divided into smaller portions and invested into a portfolio of the 500 strongest listed companies in the US. These companies include Microsoft, Apple, Google, Tesla, and Amazon. The S&P 500 ETF is an excellent long-term investment because its returns have grown at a compound annual rate of 10.6% in the last 10 years. Warren Buffett himself, the renowned investor, is a big proponent of this index and believes it can beat most investments in the long run. However, this is just one of many ETFs available in the whole market. And you can find other variations such as stock ETFs, bond ETFs, and many more. Consider investing in ETFs as they are considered a low-risk investment that's low cost, has stable returns, and helps diversify your portfolio. You get all this without needing to spend too much time and energy on stock selection. Start your investment journey with M+ Global today, and to see more videos from M+ Global, subscribe to our YouTube channel today.
M+ Global, winning the world.
Tired of low fixed deposit interest rates or having too much trouble picking stocks? Then you might consider whether investing in unit trusts is a good option or not.
Let's use Amana Saham Bumiputra as an example. In 2022, due to the volatility of the capital market, the ASB dividend payout ratio was at 4.6%, which is lower than the 8% dividend payout from 10 years ago. So you might be wondering, how can I get better returns then? Well, one good option would be ETFs. In this video, we'll look at what ETFs are and how you can invest in them with M+ Global. So what is an ETF? An ETF is a basket of securities that includes a variety of stocks, bonds, or other assets, and it is traded on the stock exchange as a single security. Take the S&P 500 index for example. It is recognized as an essential benchmark for measuring the performance of the US stock market. And the S&P 500 ETF, aka SPY, is an ETF that replicates the performance of that index. In other words, if you were to invest $100 in the S&P 500 ETF, that $100 will be divided into smaller portions and invested into a portfolio of the 500 strongest listed companies in the US. These companies include Microsoft, Apple, Google, Tesla, and Amazon. The S&P 500 ETF is an excellent long-term investment because its returns have grown at a compound annual rate of 10.6% in the last 10 years. Warren Buffett himself, the renowned investor, is a big proponent of this index and believes it can beat most investments in the long run. However, this is just one of many ETFs available in the whole market. And you can find other variations such as stock ETFs, bond ETFs, and many more. Consider investing in ETFs as they are considered a low-risk investment that's low cost, has stable returns, and helps diversify your portfolio. You get all this without needing to spend too much time and energy on stock selection. Start your investment journey with M+ Global today, and to see more videos from M+ Global, subscribe to our YouTube channel today.
M+ Global, winning the world.
Welcome to the live streaming session. On today's is the ETF Bonanza. Right?
Yeah, thanks for tuning in to this ETF Bonanza. Let's start with this session.
The host of the day, and we have Louis with us here today. Louis, say hi to our audience.
Hi everyone, I hope you have taken your dinner and stay tuned for more Bonanza or prizes later on.
Exciting prizes and rewards awaiting you in this ETF Bonanza session. Alright, so Louis, now we are actually approaching year end, right? Now it's already October. So when it comes to October, what are the plans that you usually have, or what are the market insights that you actually, have any ideas about it?
Yeah, normally people would say that, it's always a sell in May and go away. But when it comes to September and October month, normally the market will actually spike up. So that is the usual and also general tone of the market. Mm-hmm. So in terms of planning, I'm not having any plans because I think we are also waiting for budget 2024 and also some window dressing activities, year end. So hopefully that will really spike up the, trading sentiment in overall the stock market. Yeah, so that's the whole idea about the fourth quarter, yeah.
I see. So what about you guys? To our audience in front of the screen, what are the plans that you're actually having for your year-end planning? Are you guys going out for a vacation, or do you prefer to stay at home with your families, or do some other stuff? Let us know in the comment areas, all right? And I want to know, how many of you actually invested in the Malaysia ETF? Because today's topic is about ETF. But we want to check out how many of you have actually invested in the Malaysia ETF. Any show of hands?
Yeah, put some likes, put some hearts,
Yeah.
Something in the comment section as well.
Oh, hi, good evening, good evening. I can see people commenting over there. Yeah, nice to have all of you here today, all right? So just now I was mentioning about Malaysian ETF. So
yes.
The reason why I'm asking this is because before our session starts today, I want to tell you a very good news from Bursa Malaysia.
Yes, exactly.
Alright, so in this month, until 31st of October, if you are investing in the Malaysia ETF, you're going to stand a chance to win a trip to Japan. 6-day, 5-night trip, alright? So, if you haven't have any plans, but you are already investing in the Malaysian ETF, this is your opportunity for you to stand a chance to win this trip, alright? So, you don't have to pay for anything, but you need a little bit of the luck to get lucky and win this prize, alright? So, for those that's already invested in the Malaysia ETF, do check out in the Bursa Malaysia website for more details about this, alright? So this is something very exciting that we want to share with you. The first thing, got Malaysian ETF, man. I see people asking. Yes,
we have about 16 of the ETF on the Malaysian Stocks Exchange. So you can actually try it out yourself, and hopefully you can get to win. And hopefully that you can win, and fourth quarter you'll get lucky to Japan.
Yeah, alright, so that is one news for you. But of course, that is not our main highlight of the day for today.
Yes.
Because today's ETF Bonanza is about the US ETF. Alright, so, but do check out the Malaysia ETF and the rewards, the ETF rewards at the Bursa Malaysia official websites for more details about it, okay? I wish you all the best and hope you get the free 6-day, 5-night trip. So your year-end plan will be all settled, all well planned already.
Yep.
Okay, so, right, so Louis, ETF, I realized that I've been hearing a lot of people talking about ETF recently.
Yes.
And then I think this is like a very hot topic about it. Okay,
Of course, it's definitely hot topic. I mean, everyone wants to know how they can start with trading this stock market, or even how to start investing, right? I think this is a very good opportunity because we are having this ETF session, and it can actually bring us through the usual, to see where you can actually put your money in and generate more money for you. So I think this is a session, right?
Yes, exactly. And I really can't wait because initially when I heard about ETF, right, I really cannot differentiate the difference between ETF and stock markets because they are so alike. So in today's session, I want to ask Louis to help us to, let us understand better about what this ETF is all about and how we can actually get profit out of this ETF. And in my own opinion, even for beginners, newbies that you are new in the market, you don't know what you are going to invest, great, you're at the right place. You are not an active trader, even better, you are at the right place and you are new in investing. Super good, all right? So if you have 3 no's, today's session, you have to stay till the end because we're going to let you know how this ETF is going to work for you and help you to kickstart your investment journey. All right, and do stay till the end because throughout this ETF bonanza, this is going to be a 1 month long ETF bonanza campaign. All right, and the exciting parts about it is that every time you trade an ETF using our M Plus Global app, you're going to get a $1 cash back.
Wow,
all right,
that's very good.
Yes, for every trade that you have made, you're going to get a $1 cash back. And remember to over here, register your M Plus Global ID so that we know that you're actually an M Plus Global user, so that we can actually give you that $1 cash back. All right, and on top of that, if you're watching this live streaming today, and also another live streaming which is on the 11th of October, for the first 20 person that trade an ETF on the same day of our live streaming, you're going to get a $5 trading voucher as well, right? So that's on top of it. So the more you invest into ETF, the more rewards you're going to get. Okay?
Right.
We're cool about this?
Yes.
Okay, so right now, I think we're all heated up.
Yes, definitely.
All ready for this ETF bonanza.
Yes.
Okay, guys, are you ready for this? Yes? Okay, Louis, are you ready?
Yes, of course.
All right, so without further ado, I'm going to pass the floor to Louis to let's dive right into this ETF session. Louis, the floor is yours.
Okay, let's start with this session. I think the interesting part about this ETF is ETF journey. We have to understand where we are starting. So this is like a short course, but I would actually guide you to master ETF and invest like a pro from day one. I'm always, being asked, do you invest in stock market and what should I invest in? Actually, Hui Ming, do you invest and do you buy funds before?
Yeah, I actually buy unit trusts, mutual funds. I actually have a few stocks as well, but I'm not so into it.
Yep.
I just like the stocks that I'm having right now is like Apple and Tesla, those stocks that I heard usually from other people. So that's what I have.
Okay, so actually before I start this ETF session, I would also want to bring you through this Warren Buffett's $1 million bet, because this is during 2008 when that point of time the bet was Warren Buffett said that S&P 500 index fund can actually outperform a group of hedge funds or fund managers over the next 10 years. So during 2008 and until 2017, it did S&P 500 did perform more than and better than all these hedge funds and also fund managers. So what it means here for investors, do you know what it means?
When you talk about index funds, because we might have people who are very new about ETF, so when you talk about index funds, what are the things you're actually referring to? Okay,
so index funds is later on we will deal with it more in more detail. But just to give you an example of if we are having the US economy right now is called the S&P. I mean, we can use S&P 500 index to judge whether the economy is doing good or no good. So that is S&P 500. But index funds is actually tracking the whole economy. So it is tracking the S&P 500. And therefore, if you are buying to the S&P 500 index, then, index fund, then you are sort of like relying on the economy. Means when the economy is doing good, your stocks or your ETF will be doing good. So in that sense, if Warren Buffett says that you can buy into this S&P 500 index fund and outperform a group of investors, a group of fund managers, you need not to, buy your unit trust anymore. I mean, that is the idea here. I mean, because unit trust is like you rely on the fund managers to hope for the active management to outperform the market. But Warren Buffett say, no need to worry, because this is a very simplified low-cost index funds ETF that you can actually use and outperform the actively managed funds. So it means for the investor is to say that, you know, as a normal investor, simple investor, this is a simplified investment that you can actually put your money into and you can outperform. Throughout 2008 to 2017, it did outperform, and after 2018 itself, you can see that in the chart, you can see that the ETF trading value actually surged towards 40 trillion in 2022. So which means that actually a lot of people have been using ETF to trade the stock market.
More and more people are actually trading in the ETF market.
Yes, exactly. So more and more, they are getting traction. They don't want to rely on stock picking, but they want to rely on just the passive managed funds, such as the index fund, to enjoy the economy, because they are buying into the economy, right? So US economy, I mean, the top 500 companies in the world, the best company in the US is under this S&P 500. And if you are buying into this ETF, it means that you are tracking the economy throughout time.
Oh, that's really good, because we don't need to have a fund manager, you know, maybe they have their own preference about certain stocks, so they have a bias over that. But
Correct.
ETF is kind of like, it's already the index, how the economics is working, and we just kind of copy and paste whatever is in the market.
Yes. So you are actually using that tool to copy some very good top 500 companies in the world. And also, not forgetting, there are a lot of benefits investing in the ETFs.
Okay.
Do you want to know?
Yeah, of course.
Okay.
Yeah.
Okay. Hold on a second.
Okay, let's enlarge a bit and let us see clearer what's the benefits of investing into ETF.
Can you see that? Wait, hold on a second.
Can you guys see the screen clearly?
Yeah.
Is the screen okay?
Okay, maybe I should do full screen.
Oh yeah.
Is this better?
Yeah, I guess that's better.
Okay, so actually there are a lot of benefits out of this ETF. So first of all, I think we have to know that it's very diversified. It offers a very cost-effective way to diversify your portfolio. Hui Ming, you say you have bought into Apple, Tesla, but if you want to not only rely on these two companies, what can you do? You can continue to
Buy stocks from
Yeah.
stocks of other sectors, that kind of
Yeah, maybe you can buy McDonald's consumer sector, you can buy power related sector, you can buy energy sector. But what if I can tell you that, you know, if you are investing in this ETF, you straight away can get the diversification effect straight away. Would you want to do that?
By just investing into one thing?
Yes. So there's a benefit of diversification. So very cost effective and also straight away diversify your portfolio. Okay, so that is the benefit, the first benefit. Second benefit is the low cost, low management fees, which means that when you buy unit trust, how much does it cost you?
Like 3 to 5% depending on the funds itself.
Yeah, so 3 to 5%, I think that is considered quite expensive.
It's
and because
very expensive to me actually.
Yeah, because I think they need to pay their sales agent, they need to pay their fund managers, therefore it is higher. But if you are using ETF to track the S&P 500 index, and therefore you are just using maybe 90% of the cost, it becomes about 0.03 or 0.09%.
Low? Like
Yes.
funds are like 3 to 5%. This one is like just 0.03%.
Yes,
How is it
exactly.
even possible?
Yeah, because they are just tracking. They are not doing any actively managed position here. So it means a very low cost to them. And thirdly is transparent. So whatever they buy into this ETF, you would know what is inside, because they have a quarterly and also annual report, and therefore you know day by day, you know what is happening in this ETF, and everything is transparent to you, to investors. So that's why I think it makes sense for normal investors to really enjoy the benefit of this ETF.
Wow, that's really great. Okay, I like the diversification, and most of all, I like the low cost. I don't have to pay so much for the for the fees.
Exactly. I mean, as a Malaysian, we like discounted stuff lah, to say that. Yeah. Okay. So before we go into what sort of strategy we have, we might as well look into the 3 steps in mastering ETF. Okay, there are something wrong with my... Okay, can you see this? Okay?
Yep.
Can everyone see this? Okay, yeah, okay, great. So, first of all, what is an ETF? So, ETF, in long form, it means exchange traded funds.
Okay.
It is issued by an asset management firm, perhaps in Malaysia we have like Affin Bank or Affin Investment Asset Management, and also other, like Public Mutual. Okay, so those are the asset management that provides all these ETFs or all these funds in that sense. So asset management means one company that issue this ETF out, okay, and then it is listed and traded on stock exchange. So unlike unit trust, you can only buy maybe day end, then next day only you get the units. But this one, you can trade through M Plus Global. Yes, directly. So next thing is that ETF is a basket of stocks. So assume that you are, going to a fruit seller, right? Let's say, maybe today you want to eat apple, orange. What would you do? You can't decide, right?
It's very troublesome because I'm staying by myself, and then if I want to buy a lot of fruits, right, I might need to buy a lot, like really a lot, and I can't finish it all by myself.
Yeah.
And the best thing is to actually get just like a box of mixed fruit. Everything is just in a box. That kind of stuff.
So I think it's good that we have this fruit basket. So fruit sellers will pack all this together, maybe two apples and 2 oranges, some bananas, some grapes, and so that you can get a variety of things, right? So ETF is the same. So assume that ETF is a fruit basket, and inside the fruit basket we have apple, orange, grapes, bananas. So this ETF itself has the 500 companies. Okay, so assume we are buying to S&P 500. Therefore, we are having all this Apple, Tesla, Meta, Amazon into this basket. So straight away we are like, buying to the bulk of these stocks.
I see. But would that be very expensive for me to buy this 500 company in just one go?
So for instance, you're buying like few different companies, you have to pay every company for us, you have to pay every transaction, it costs you $3 or every stocks that you buy or every company that you buy, you have to incur some brokerage charges. But in terms of ETF, once you buy into one ETF, is already packaged together, the 500 companies, you only pay one transaction fees. Yeah, so that is the beauty about ETF, okay?
Okay.
Yeah, so next thing is that the second step to master how to select ETF is to understand what are the key considerations here. So first of all, who is the issuer? How big is the ETF? NAV or AUM size? What are the fees incorporated? These are some of the things that we take note of that. Then thirdly is what strategy to use. So this is what I can think of right now for ETF, because we are talking about to enjoy the long-term economic benefit out of this US economy. So definitely we want something like some sort of long-term method. And I would say that dollar cost averaging suits this kind of purpose. I think we will go through one by one on this, what is ETF until selecting an ETF, and also going through the sort of like a winning strategy. I'm saying this winning strategy is because it is backed by data. It's not a sure win, but at least the chances are there.
You're saying dollar cost averaging is a winning strategy? Like, it's a boring strategy to me.
I mean, everything starts with boring, but once you see the numbers picking up in terms of your growth potential, every year getting you about 9 or 10% over the past 20 years, that's amazing, right?
Okay.
I mean, since 2000, since 2000, this ETF has been outperforming. I mean, to be honest, it has been giving you more than EPF that is giving about 6%. But this strategy has been giving you maybe about 9 to 10% annually. So that is the kind of data we have to back this, to say that by using this method, it is likely for a long run. If you believe, okay, the idea is that if you believe in the US economy over the long run, then that is a make sense strategy.
I see. Okay, looking forward to hear more from you. And I can see we have supporters from Priscilla saying that boring is good. Investment should be boring for ETF.
Wow, you see, someone backed me up, man. Okay.
Boring with good returns. All right. Okay, so let's talk about ETF. Come on, can't wait.
Yeah. So step one, just like you mentioned about what is an index fund or what is an index. So I will just briefly go through this. So this is S&P 500, and under this S&P 500 index, there are 500 companies. So if you want to buy into each and every of the companies, you have to buy 500 times.
Yeah.
It is time consuming. It is charging you every time you transact. You need to pay brokerage charges. So it is it doesn't make sense for you to buy individually. So might as well you buy into the whole ETF itself, and then you just pay one ETF or brokerage charges, and you can enjoy the benefit of all these companies together.
Ooh, wow, that's a really good option.
Okay, so I'm pretty sure a lot of people would know some of the names here. Some Microsoft, Google, Apple, McDonald's, Amazon, things like that.
Yeah.
So S&P 500, it shows that it shows you the best 500 companies for the time being, and every now and then, do you know that they do rebalancing?
Rebalancing like how? Like I know that S&P 500 is like the 500 top companies in
Correct.
the US. So if they are not performing well, they will be replaced by some other companies that's actually doing better.
Yes, I think everyone would be quite familiar with what happened in FBM KLCI. So FTSE FBM KLCI would always rebalance, or they have this addition and deletion and semi-annual review. So which means that half yearly they will do review to say that who are not in this criteria or this requirement, then they will be kicked out and deleted, and then they will be adding in with some good companies. Similar to S&P 500, so they are also doing the same thing. Every now and then they would do some review and to make sure that all these are good tip-top companies. Whoever are not good enough for that requirement, then they will be replaced by another better ones. Okay?
Wow, that's so convenient for new investors that really have no idea how to invest, right? Then they just do all the review and all the stuff for you, so you just have to invest into ETF and save up all the troubles.
Correct. So it saves you time, save you costs, and all in all, it is all in all, it is a very simplified kind of investment.
Cool. Right.
So just like I also mentioned about if the investors have own individual preference, I mean, can ETF offer them another thing other than just S&P 500? I think definitely we can look into this chart here. It shows you that equities is having the highest asset under management, which means that a lot of people are liking the equities, means they like companies' investment. Therefore, you can see that a lot of issuers are issuing ETFs under the asset classes of equities. So it doesn't mean that they don't like bonds, but it's maybe the liking of equities is more for now. Then the bonds maybe is slower, but again, it is also quite huge. Rank number 2 is bond, then thirdly is commodity. So if you look into some types of this kind of some types of ETFs that we want to mention to you is also very interesting, because equity, just as I mentioned, S&P 500 is ETF that invests in stocks and can be broad-based or even specific sector or country. Then bond ETF, do you know what is the bond ETF?
Yeah, bond is like they borrow money. The government borrows money from the bank, and then they issue kind of.
Okay,
like
it's related to. Sorry. It's related. Sorry, I give you a very tough question. Actually, I could be the one actually answering. So it's actually invest in fixed income. So it's like treasury bills and things like that. So government bonds. So which means that right now government is actually paying a very good this what you call that yield is about 5%. Yeah. So I think all in all, bond is more towards a safer and conservative side of things. And I think a lot of people like commodity. Commodity that gold or even oil.
Yeah,
I think
gold.
Malaysians
love gold.
Yeah, exactly. A lot. People tell me that they want to buy gold and store inside. But do you realize when you store, it's also a risk to store the gold inside your house? I mean, one day if the thief come to your house and you take the gold, then whatever you have saved up is already lost. So the good thing about looking into commodity ETF is also, if you are gold investor, you want to buy gold, might as well you buy something like this in ETF. It tracks the gold prices. At the same time, you need not to worry about it is safe or not, because it's definitely safe. It is just inside your app, and no one can take it out unless you give out the password for people to sell off the shares. Okay, sell off the ETF. Okay, so in other words, I think it's quite safe in that sense, and I don't like to hold physical gold, but instead I like to trade maybe. Yeah.
Malaysians would really love this commodity ETF, because Malaysians really love about gold, and oil, oil and gas and gold. These are the three.
Yeah, because we are also a very commodity nation. So basically, we have Petronas. Since young we know about Petronas and things like that. So oil and gas is definitely one of the areas that people like to invest, and so that's why oil. If you're trying to see oil prices, then you can actually look into the ETF of oil related. Yeah.
Yeah.
All right, you can maybe you want to take some question from the floor or something like that.
questions. Let me see.
Okay, I saw Edward Yong asking about, gold doesn't give you interest, at least some ETF gives dividend. Okay, yeah, it makes sense. I think people love to like, the dividend related ETFs, and I think in Hong Kong, there are more ETFs that is bringing you more dividends than what Malaysian companies can give. So I think if we are separating these two parts, right? Perhaps, Edward Yong, you want to look into Hong Kong side of dividend ETF because that gives you more chances of getting higher dividend. But if I'm really investing in US, I would really want to look into technology-related stocks because US is so advanced in terms of technology, and we have all this innovation throughout past 20 years, and that is why you can see that Nasdaq and S&P 500 is actually growing at a rate of 10 to 15% year in year out. So that's why I think people should look at US for more technology related stocks.
I see.
But if you want to have a more dividend approach kind of segment, I think you can go with the Hong Kong side of things.
I see.
Yep.
Okay, hope that answers your question, Edward Yong. But I think what Edward Yong is trying to say is that if you buy real gold, it's not going to grow you small gold little babies. But if you buy gold
true.
ETF, it's going to give you dividends.
Perhaps, yeah, okay, we can look into that. Okay, and the fourth type, looking at my slides here, actually this one I wouldn't say too much because next week we have one special guest.
Yes, another live streaming session, and Louis is going to be focusing on this leverage and inverse ETF. So if you want to know more about this part, stay tuned for our next live streaming session. All right, so.
Yeah, okay, so I think that is the types of ETFs that we have. So to give you some example of thematic ETF, so out of the equity, out of the bond, out of the commodity, out of the leverage and inverse, what other things you can think of under this ETF can be quite vast in options, because we have electric vehicle ETFs like DRIV. It only focuses on this EV, electric vehicle. So which means that whatever, the company, Tesla, Rivian, Nikola, all this will be packed under this electric vehicle. So if you like, maybe you are Elon Musk fan, then maybe you want to buy into Tesla. But what if you want to buy into a whole bunch of electric vehicle? Then this ETF could be suiting your taste. Okay,
that's great.
And recently we have this Bitcoin, coming back in a bullish run. So I'm not too sure what is happening there, but people are looking at a safe haven perspective, and perhaps those that want to have and enjoy the opportunity to get into this exposure of cryptocurrency, this might be suitable for you. Seesaw Bitcoin Futures ETF 3066 in Hong Kong. So you can actually trade in the Hong Kong markets.
Wow. So even I have no idea about crypto, but I want to invest into the crypto ETF, I can still do so.
Yes, definitely. And semiconductor is the same thing, but it's very niche towards the technology sector. And S&P 500, we have another, it's called SPLG, is a so-called a cheaper version of S&P 500. So if you don't want to trade into SPY, then SPLG could be one of the options that you can actually look for.
So I saw a question over there from Wei Jun, which ETF is the one that tracks S&P 500. So SPLG is actually one of the ETFs that's tracking S&P 500.
Yeah, other than that, we have VOO and also IVV. Maybe later on we can show you using the app itself.
I think we can show it right now.
Right, that's good.
Right, all right. So guys, if you guys have already downloaded the M Plus Global app, you can do it with us. We're going to show you how you can actually search for all these ETF from your M Plus Global app. All right. So you have to open up your M Plus Global app and then go to the search button.
Yes.
And just now we show a few examples. So we're going to.
So recently we have done an update, and that is called the so-called the ETF. Wait, hold on a second.
ETF filter.
Yes, hold on a second. Great.
Where is it?
Where is it? Is it not updated? It's all right.
Let's search for the.
Yes, let's go into the this search function first. Okay, later on we'll show you that app filter. But if you look into this SPY, it's very interesting. What you want to know here is definitely. Can you see the screen of the app? Should be.
I think
I'm blocking already. I'm so sorry about that. Okay, so first of all, you need to know the profile. Go into the profile and you check the overview. So what is it tracking? You see, SPDR S&P 500 ETFs Trust, and the benchmark is S&P 500.
See, so search for the word benchmark, which is highlight. It's actually in gray color font, and then over there it will tell you that what does this ETF tracks.
Yeah, and we can also see the fees here is 0.09%, and you can see who is the issuer is SSGA funds. Okay, it's one of the issuer right now. Okay, so even by going down, scrolling down, you can also see that the investment objective of the fund is to seek and provide investment result that correspond generally with the price and yield of the index. So generally it tracks the S&P 500 in short. Okay, so that is the idea behind looking at this. Another one, just like you mentioned, which ETF that tracks, you can also look into VOO.
VOO.
Yeah, it's Vanguard. So it's a different issuer. Who is the issuer? You can go into profile, overview, then you can see it is from the issuer of Vanguard Group Inc. And also it tracks
the S&P 500.
Yeah, and can you see the fees?
Oh, it's cheaper. It's 0.03%.
Yes, exactly. So I think you can always find an alternative towards that index, and it gives you a slightly lower option. So definitely you want to look into expense ratio, the fees part, as one of the items to before you select ETF. So
I see. Yeah. Wow, that's so cool. All right, so guys, you all know how to use our M Plus Global app to search for the ETF, and then to know what index are this ETF actually tracking, all right? And then you also know where to find the fees and also all the details about this ETF, all right?
So second step that we need to know is to how to select an ETF. So what kind of considerations that we want to take into account is the issuer.
Okay, yeah, so, just now you mentioned about the, I forgot.
Yeah. Okay.
So long.
So issuer is like a fruit seller. Okay, you are going to a fruit shop, so you have to go to maybe Aeon, Jaya Grocer, whoever to buy the groceries or fruits, right?
Yeah.
So that is considered as an issuer. So right now we have like S&P, the State Street, we have Vanguard, we have BlackRock. So there are so many different issuers. So issuer means the fund management, the company that creates this ETF. So it's like Aeon providing you with a fruit basket, or Jaya Grocer providing you with a fruit basket.
Okay, then a question.
Yep.
We decide which issuer is actually good for us to choose from.
Okay, generally speaking, I would say that we can look into some popular ETFs issuer in the US, but one of the areas that we want to look for is always the asset under management. So which means that how much funds does this company take in from investors to invest for them. So for instance, you can see BlackRock, the asset under management AUM is 2.23 trillion, Vanguard is 1.9 trillion, State Street is about 926 billion. So the bigger generally is better. But some asset management are quite niche, which means that they can actually look for special exotic kind of ETF, such as cryptocurrency ETF.
Okay.
So just now we have seen CSOP, right? CSOP. Yeah. So that is also another area that we can actually look for. So towards more thematic kind of thing, normally the AUM will be smaller. But if they are tracking like the big ones like S&P 500, QQQ, the gold shares, or even the the oil related ETF, generally the
bigger the better.
The AUM is bigger, and also bigger is better because it is considered as more popular and also more stable.
I see. Okay, so these are actually the three issuers, the top three largest issuer.
Yeah, in the US.
I see. Yes. Okay, cool.
So the next thing that we have to consider is that the net asset value, just as we mentioned, the asset under management. So it's like if you have more people giving you money to invest, it means that you are quite promising and people are confident in you. So the popularity goes up, and also it will be more stable, because if you're investing in an ETF, if all the investors at one shot take out the money, it's like a bank run, something like
You go bankrupt.
yeah. So it means that more people redeeming it, and they don't have any more money to invest. Then how can this ETF continue to run? So that is why I think it's very important. Also, if they are higher in terms of AUM, then generally it will be more stable.
I see. Okay.
So yeah, so if we look into the M Plus Global app, this is the area that we want to look for. Can you see this one? It is having this column here. Wow.
The total NAV.
Yes, the total NAV. So we have this inside our app, and certainly this is the area that we want to look for. When we click onto NAV itself, and it will show you how many billion is under this fund itself. Okay, so we have S&P 500 index fund. We have also the Nasdaq 100 index fund. Okay. So thirdly, okay, what are the things that you have to take into account? I think this is what Hui Ming likes, right?
Yeah. I think you mentioned earlier just now.
Yeah, I think most of the
I
Malaysians.
know some of the Malaysians, not just me.
Yeah. Okay, so just like you mentioned about unit trust, the cost is about 3 to 5%. I think what is important here is that ETF gives you a passive way to invest in stock market, and therefore the cost will be lower. So in short, we like to look for expense ratio that are lower. Just now we have showed you about the S&P 500 is SPY expense ratio is at 0.09%, and we have another one VOO is about 0.03%. As compared to 3%, that is really a vast difference.
But I would still choose the one with 0.03%.
Yeah, I mean, that could be one of the options that you can use. Okay, so what is expense ratio? Is basically the funds or the asset management also need to survive, right? So they have this admin fee, record keeping, they have all this customer service and things like that. So they would need to incur some costs. So that is why expense ratio will be incurred when you're buying ETF. So it's the same thing when you buy unit trust, you are paying about 3 to 5%. So in this, you are paying the expense ratio. So that will be one of the costs that you need to take into account. So 0.03, 0.09, and 3%. So let you choose. Okay, what would you choose? Exactly. So where can you find the expense ratio? Is under our app as well. Just now we have showed you as well. Under if you go into SPY and you want to look at the profile, then overview, and look at the fees here, 0.09. Okay, so like for instance QQQ under profile, under overview, and then going to the section of fees. Okay, same here. XLE is tracking the oil related counters, and going to profile, overview, and then fees. So XLE is actually 0.1%. So if you are trading the oil related, it may be higher, or even you're trading the precious metal, it may be higher.
I see.
Do you know why? Is it
why? Why? I don't know.
Yeah.
Why is that so?
Okay, so assume that you are an ETF issuer of a gold, then you need to keep the gold, right? Because you're buying gold. So you need a warehouse or whatever, a safe vault, to keep the things. So that costs you more. Same goes to oil. Maybe they need more silos to put in the oil into this refinery and whatever it is. Then they need to store all this oil in one place. So that's why that could be the reason for commodities related. They need to store the physical item of the commodity, and therefore it costs warehousing. All this maybe labor. If you're having a goal, you have a safe vault, you need security guard as well, right? So that is the idea here. So if more people that is looking into this commodity related, generally it may be higher in terms of that.
I see. Okay, Louis, I see a question over there from Chikin.
Yes.
What is the reasonable expense ratio over here?
Okay, I would say that you have to compare the apple-to-apple comparison. So if you're buying into S&P 500 index fund, so just now we have showed you about 2 of them. So you can actually compare a few more. What I can see is that 0.03 is really reasonable out of these 3 to 5 ETFs under this segment. Maybe QQQ is higher, or maybe the commodity is higher. So it depends on what you're looking at So generally speaking, you want to pay lesser. That is why, yeah, Edward Yong said something like PE ratio, the lower is better.
So there's no like a standard or guideline.
No, as long as you are tracking within the same segment, like S&P 500, you need to check against the same segment.
I see.
Yeah.
So and then I just handpick whichever that is the lowest or that is I feel more comfortable with the ones.
Correct. So generally that is the idea. The lower, the better. Yes, Edward Yong is correct. Yeah.
Okay. Will there be any difference, like for like different ETF, but they're tracking the same index, but they have like different expense ratio?
Yes, just now we have showed you the example, right?
Yeah.
So they are tracking S&P 500, but one is 0.09% and another one is 0.03%.
Yeah. What's the difference actually?
Okay, so different issuer has different kind of costing. So assume that Aeon and Jaya Grocer, you can think of them as two also selling groceries, right? But they can have different structure of cost, right?
Yeah.
They can have maybe more expensive, more higher salaried security guard,
Okay.
Yeah, maybe their decorations inside is much more premium, and therefore they incur more cost. So I think if you're using Aeon and also Jaya Grocer kind of idea, then generally speaking, different asset management company also have different kind of execution system, towards record keeping. Their auditors might be different, admin fees are different. So things like that will cause differences between all this. Okay.
Okay, that makes sense. But it doesn't affect the performance of my ETF itself.
Okay, performance-wise, they are likely to be almost similar. The likelihood of it being different is very, very little. Maybe just 0.1% kind of differences. But I don't think it will be alarming for investors to choose whichever over the other ETF. So generally speaking, if you're tracking S&P 500, the idea is in the long run it should normalize out because you're already buying on a later on we'll share with you these tips, right? Okay, well I shall not I shall not talk too much on that strategy right now. Okay.
You should stay till the end of the session because Louis is going to spill more beans to you.
Yes, definitely.
Okay,
So in short, okay, I would like to just summarize it before I go into step 3 and also talk about some of the top ETFs to, as normal investors can start off with. So the summary of the ETF is like what Warren Buffett said, is a very cost-effective and also diversified and simplified investment style. So that's first of all. Yeah. And secondly is that it is a diversified portfolio. And thirdly, it has various asset classes that can cater for many, many different individuals. So if you like commodities, gold, oil, then you can actually look for that. So it can attune to most of the investors, and therefore it is so popular since 2018. Although it has started since 1993, but it really catch up after 2018.
Yep. Okay, so Louis, now we need to, we have heard so much good things about ETF, and then I think I'm now more confident about ETF already.
Definitely.
And I think I really wanted to start my ETF investing journey. All right. So, and also don't forget that this is an ETF bonanza that is going to last for a month which is until 2nd of November. So, if you are the top 20% in today's at the days where we have live streaming session, which is on today, and also the next one will be on the 11th of October. If you are the top 20% that invest into ETF on these 2 days, you're going to get a 5 US dollar trading voucher for if you trade an ETF on that day. All right. And for those that is not within this 20%, or whichever trade that you have made on ETF, you're still going to get a 1 US dollar cash back for every single trade on ETF as well. All right, so grab this opportunity and come on, Louis, tell us what are the ETFs that we can actually start investing in.
You are so excited that you call my name ETF right now. Oh my. Okay, anyway, top ETF that you can actually consider is to look for Investco QQQ. I think everyone likes it because it sort of like track the best technology related stocks in the US, and it tracks only 100 stocks. So which means that there are more representation of technology stocks under this QQQ. Then next one is Energy Select sector fund, as SPDR fund, and this tracks the energy sector, which is companies in the oil and gas and other energy related industry. And this is very, very relatable with Malaysians, because Malaysians always look for oil and gas counters, and because they also monitor crude oil prices, right? So that's why I think it's very suitable for investors in Malaysia. And when you buy maybe hibiscus, you can think of about buying, because hibiscus will close by 5 p.m., right? So you can start your investing journey at 9:30 p.m. onwards and trade in the XLE as well. And thirdly, you can also trade in the gold trust, iShares Gold Trust, and it tracks the price of gold bullion, and also it can be a tool to hedge against the inflation. So these are the areas that Malaysian likes it. You like technology counters, you like oil related counters, you like gold related counters. Might as well you think about ETF as well.
I think this is like 3 very good ETFs to start with. And guys, remember how you can entitle for the cashback and also trading voucher. Remember to sign up yourself through this link over here. Put your M Plus Global ID so that we know that which ID we're going to give the trading voucher to. And also don't forget to join our Telegram group, which we're showing over here. After you have trade, remember to screenshot your trade and then send it in the group with the hashtag ETF Bonanza. Alright, share your trade inside the group, and then we will how do I say? Filter. We will pick the first top 20 that actually post your trade in the group, and then we will give you that $5 trading voucher. Alright, so remember to do these 2 steps for you to entitle the trading voucher and cashback. Alright, join the Telegram group over here.
Okay, right now is the third part, which is step 3, the dollar cost averaging. Initially, Hui Ming asked me to put a very, very chunky title here to call it the sure win strategy. I say there is no sure win strategy in investment. I've always said that Hui Ming is always talking about rewards, but in my view,
investment.
Yes, but I always say that I would look into risk side first. Yeah, so that's why I'm very, very conservative. I don't like to say everything is a sure win strategy, but at least if we back it up with data to say that if we invest consistently for a long run, then it makes sense for you, and it shows in the over the past 10-20 years, it has been showing a good track record based on this DCA method. So I mean, I'm using a sort of like winning strategy, but it is a data-backed strategy. Yeah, so that is the whole idea here. Okay.
All I know about dollar cost is a boring strategy.
Oh my god! I mean, definitely we are looking at something easier to capture, and definitely want to look into something that normal investors can start to invest straight away next day. So what can we really do, and what can we learn from this dollar cost averaging method is, okay, first of all, we need to know what it is. Okay, what kind of strategy is this? This is dollar cost averaging, which means that it continues to invest a fixed amount of money throughout time, and there is a fixed amount, fixed regular interval that you need to invest. So assume you're already putting in maybe $100 per month, then you continuously do this for next 10-20 years. I know it sounds very, very boring.
It's like a commitment to make.
Yeah, I mean, everything is a commitment in life, right? So you have to make money, you have to make something, with a good data backed kind of strategy. So I think worthwhile to look into this dollar cost averaging method. So you invest consistently a small amount, a fixed amount every time. So why do you need to do this kind of regular interval kind of dollar cost averaging method? Is because when you do it consistently, you can ride along this upward trend, also downward trend. So when it is going up, you buy lesser units. When you go down, you buy more units. So you're not being emotionally biased. You don't say that, today market drop, I don't want to buy already, I feel so sad. It is not that, through thick and thin, you have to continuously add on position. And if you continuously add on position with the example of S&P 500, okay, then you will get kind of a strategy of maybe 9 to 10% per annum over the past 20 years. So that is a very amazing track record that you can generate more returns by yourself and more than the EPF returns. But I'm not trying to say that EPF is no good, but I'm trying to say that by investing your part of your money or of your disposable income, you can generate your returns even more as well. But EPF you still have to pay, and that will give you a sort of a solid kind of retirement fund. So two are different things. I'm just saying that it can be higher than ETF, but it doesn't mean that it is better than ETF. Okay.
Okay, so just now Louis, you mentioned about we need to like invest in a very consistent period of time. So does it have to be monthly, or it can be like, you know, quarterly or maybe half annually? Would that be okay?
Sorry. I think it's fine as long as you continuously invest in a fixed amount and a fixed interval.
Just have to be consistent about the whole period of time.
Yes, so monthly is fine. I think quarterly is fine, semi-annually is fine, annually is also fine. Just as long as you do it consistently, I think it makes sense to you. It's like sort of like a forced saving to you. So if you want to invest 3 monthly, maybe you invest $300 US on a quarterly basis. But if you want to invest monthly, you can start small, but you also enjoy the wave of the economic activities, because you don't know when is the market crashing. So
makes sense.
Yeah. So if you are buying annually, then you may lose out the lowest point. But if you invest consistently on the regular basis, then you can actually enjoy at any point of time you are exposed to the market. So that is the beauty part of the dollar cost averaging.
I see. Exposing market at every single point of time.
Yes.
That's the point.
Okay, so just give you a scenario here. So if you're buying into SPY on a periodic basis of periodic investment is $100 US and monthly basis, and throughout the past 10 years since 2013 April until 2023 April. So this is the scenario. Okay. What do you think the results would be?
Just now you mentioned about around, if I get it, around 10?
9 to 10%.
Yeah.
I mean, if it is not good, I wouldn't be showing you right now. Yes. Okay, so before I go into the results section, actually I want to show this as well. If you are always timing the market, you don't know when is a good timing, but assume that you already bought into during the year 2000, the .com bubble. Then you need about 7 to 8 years before you can recover this position. Assume that you only buy one time, but you don't, when the market crash, you don't want to even look at the market anymore. You need to wait 7 and 8 years.
To break even.
Yes, exactly.
To come back to the same point again.
Come back to 2008, then again, wow, you're so gung-ho again. You buy into 2008, wow, you give it another crash. So again, when that comes, you are only able to break even in 2014, 2015. So what it means here that if you're buying, always timing the market, always feel euphoric when the time is there, then perhaps you might be so-called not really investing, or you want to time the market correctly, but you can't, right? So what is the ultimate strategy right now here? So if you are using the DCA method, if you are using the DCA method, .com bubble, January 2000, in between both crises is January 2004, global financial crisis is January 2008, bottom of GFC is February 2019. So I give you 4 scenarios here from the .com bubble, and if you bought in all this while, $100 US, and also the annualized return is about 10% for that particular 20 years, By
using the dollar cost averaging method.
Yes, dollar cost averaging method. Even though if you want to say that you start just in 2004, 2004, and you also will get the similar around the 10.9%. And when you bought consistently throughout January 2008 during the global financial crisis, and your returns are also quite decent, 11%. And bottom of February, bottom of GSC during February 2009, it's the annualized return is about 11%. So what I mean here is that right now you have this data. Would you want to try, to start investing in ETF based on this data?
Yeah. It's still boring, but I can see the rewards over there, and I can see how it's different by using the dollar cost averaging strategy, and by investing one time and then to wait until the market recovers again, which is going to take like 7-8 more years. But I can actually gain profit out of it.
Yeah, you definitely wouldn't know when is the lowest point.
Yeah.
But you definitely want to get exposure at any point of time. So this ETF strategy will give you this amount of opportunity. And if you are buying since 2013, just now that scenario, 2013 April until 2023 April, your DCA cost is here and your portfolio value is here. So which means that throughout time you have actually gained about 10-20%, 9 to 11% per annum over these past 10 years.
Nice.
Yep.
It's very promising.
Yes, definitely. That's why it's a sort of like a winning strategy, but it's not a sure win strategy.
I think I'm starting to liking this strategy.
Yeah, definitely. You have to look at it.
Priscilla say nobody can time the market, so DCA is that so you don't have to make emotion-based investing.
Yes.
Yeah, great thought. And then let's see if there's any more other questions.
Is it necessary to pay taxes? That part I couldn't really answer you, but I think for dividend investing or dividend related investing, you might be charged with a withholding tax in the US. I think if I'm not mistaken, it's about 30%. So every dollar you make from in the US from dividend, then you have to pay 30% straight away to the government. Yeah.
Okay, and Nicholas asked about, is there cashback for every trade made as long as it's ETF? Yes, during this period of time for this ETF bonanza, which is today until the 2nd of November, as long as you trade an ETF, you're going to entitle for a $1 cashback for every single trade, and there's no limit for this $1 cashback. All right, so let's say if you invested 10 different ETF, 10 trades, then you'll be entitled for $1 cashback for that.
So it also applies on the selling, right?
Yes.
Buy and sell.
As long as it's a transaction.
It's a transaction of ETF, then we will so-called reward you with $1
cashback. All right, but remember to put your M Plus Global ID over here so we know which ID you are here, and also remember to join our Telegram group over here. And then showcase your trade in the group for you to win that $5 trading voucher as well for the first 20% when we have our live streaming session.
Yep, I saw some questions to say, how does dollar cost averaging address the potential downside of investing in a declining market? This is exactly the point. If you don't know when is the lowest point in the market, therefore you need something to not to time the market and continuously exposing yourself to the market. Because if dollar cost averaging works when you believe in the economy. So if we believe in the S&P 500 or we believe in the US economy, therefore there is chance for us to sort of like make an opportunity in this whole economy. That is where you want to enjoy it. You want to go into ETF. At any point in time, you don't know when it's the lowest point, then the best is to do DCA.
Yeah, because we really cannot time the market.
Yeah, it's very hard. I wouldn't say cannot, but definitely there are perfectly alright traders. Those even George Soros or whoever, they can time the market. I mean, that is just an idea because there are certainly professional traders in the world. I cannot say that there is none that time the market. But I think yes, they can time the market. But if you just want to do passive investing, I think this year works. Yeah.
Okay. All right, so I think we have almost come to an end over here, right?
Yes, definitely we have. Okay, just before we end this, where can you find more information on ETFs? These are some of the areas you can find. M Plus Global app filter. Let's check this out again.
I think we need to sign in the account first.
Oh, maybe they have signed in the account. Oh, it could be so. Hold on a second.
Oh, no.
Okay, never mind. We couldn't show you that particular filter here, but it's alright. Okay, anyway, there is an ETF filter that shows you from what index you want to do ETF, or from what thematic that you want to do, like dividends. You want to look for dividends. There is a dividend ETF there. There is also commodities ETF. There is also this oil related, this bonds related ETF. So that is the place that you want to find information. M Plus Global app. Secondly is that ETF.com or ETFDB.com. That is the area that you want. Okay?
Right. All right. So guys, if you want to use the ETF filter, remember to create an account on our M Plus Global app for you to entitle to use this filter. All right. So it takes only 5 minutes for you to open an account. It's very easy, very simple steps for you to do that, and then you can enjoy all the cool features that we have in our M Plus Global app.
All right.
Okay. So I guess we have come to the end of our live streaming session, and our audience are very actively asking questions today. I think they are also very excited about this ETF bonanza and can't wait to start trading into ETF and win all the rewards already.
Yes, definitely. I hope that DCA will help you, sort of like winning strategy, but you have to do your own due diligence as well. Okay.
Okay, so guys, that's all from us from us today. Thank you once again, Louis, to be with us here today. And also don't forget to join our this ETF bonanza. We're going to have another session on the 11th of October, which Louis is going to talk about the leverage and the inverse ETF.
We have a special guest on that day as well.
Yes, we have a special guest on that day. All right. So if you think that you are ready for go for a more advanced ETF session, right? Stay tuned on this 11th October live streaming session, which Louis is going to share more with you.
So there is actually one more question. I would like to take this before I end this session. Is that all right?
Sure.
Okay, so CCGO is asking about, is it possible to buy a fractional ETF since SPY costs US $426 for one share? Okay, so on fractional shares, the fractional shares is in the pipeline, and definitely we will be updating that for you. But if you want to buy into SPY or S&P related ETF, you can choose just what I mentioned just now is SPLG. Okay, SPLG. That is costing you a lesser, about $50 kind of entry level. So I think SPLG could be one of the options, and they are also tracking related S&P 500 index. Okay, so I think that would be the last question for today. Thank you so much for tuning in.
And don't forget to join our this ETF bonanza to win all the rewards. Join our this Telegram group over here, and then share your trade in the group with the hashtag ETF bonanza. The first 20% that shares the trade on the same day of our live streaming session is going to get a $5 trading voucher. And for any other trades that you have done throughout this ETF bonanza, you're going to get a $1 cashback for every single trade. Alright, so happy investing into ETF, and see you guys in the Telegram group and also the next live streaming session on 11th of October, and see you again.